on WPG Talk Radio 104.1.
Thank you very much, ladies and gentlemen. The president has been in studio for the past 5 minutes. I am a blessed man. Michael Rubel making a stop in the palatial studios of Hurley in the Morning, as he does every day. We're very, very fortunate. Best in the business. Ladies and gentlemen, Chuck Malamut is the official financial advisor to the Hurley in the Morning program. We're in our 26th year together, doing his regular weekly Tuesday morning program in the 8 o'clock hour with our official financial advisor, all about your financial matters with Chuck Malamut. Chuck is the managing director. He leads his team, the Malamut Group, at Morgan Stanley's Northfield, New Jersey office. You can reach Chuck and the Malamut Group by dialing 609-383-2010. And the following program that you're about to listen to is presented by Chuck, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck. They do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast. They are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. Let me give you an idea what Chuck is going to be talking about, and then we'll turn the program over to our host, Chuck Malamut. Chuck's going to talk about the fourth quarter GDP. Your non-professional on this panel, your lowly, knuckle-dragging caveman, mayor of the morning, predicted that it would happen, and it did. But I'll let Chuck share the bad news of the fourth quarter GDP when we come back with Chuck in just a moment. Chuck is going to talk about corporate earnings. He's going to talk about President Trump. And always remember, Chuck's program is not political, but Chuck does not ignore the geopolitical realities. And obviously, when a president speaks, markets move. And we'll talk about market extremes as well during Chuck Malamut's program. You know, I saw something about 3 o'clock this morning that I wanted to bring up to Chuck, and it was for the first time some of the headlines of the Trump honeymoon, is over, or the Trump honeymoon has swooned, because the president made an immigration decision. I don't believe anything to that. I do know that the Dow was down a little over 100 yesterday, but that's how some of the media outlets are reporting it. I'm not saying financial sector, but the regular media at large trying to end, because obviously we've seen $2 trillion come into the American economy that was not there prior to November 8th, 2016. With that preamble already loaded, the official financial advisor to Hurley in the Morning, Chuck Malamut, is here. Good morning, Chuck.
Good morning, Harry. How are you today?
I'm doing great.
So
your champion is feeling well.
So the good news is I'm glad right at the end of the last hour you put a disclaimer out there that I was not a groundhog
or
a hedgehog.
Or a hedgehog. Because the one guy's name is Chuck.
I was thinking, okay, well, I've been called a whole lot worse. But
well, you're not Staten Island Chuck. That's what I'm saying. Staten Island Chuck is a groundhog.
And certainly
you're not a groundhog.
And there's another Chuck who's from the state of New York that...
Now, Steve Wynn's called you worse than a groundhog or a hedgehog. I'm just teasing.
Harry, it was many, many years ago. We were both
Chuck,
both young and dumb back then.
But listen, though, as young guys, we had first name basis with the President of the United States and now the head of the GOP fundraising arm of the Republican National Committee in Donald Trump and Steve Wynn. This is an amazing time.
Yeah, Harry, it is. And unfortunately, the media has done a remarkable job just trying their very, very best to be sort of, I guess, and again, we're not political here, but I view it as being somewhat of an obstructionist group.
Oh, yeah, they're undermining the presidency. There's no doubt.
The fact of the matter is, it'd be nice if you could kind of fast forward this and say, okay, where are we 6 months from now? And all the executive orders that are being signed in place, are they effective? Are they the right thing to do, the wrong thing to do? But
they're not even giving a chance. You're just wrong. Everything you do, if you say it's right now 10 after 8, you're wrong. I mean, it's just they're not letting them breathe.
I view it, Harry, as total disrespect for the office of the presidency of the President of the United States.
Exactly as I expected, though, Chuck. No surprises here.
And I think that is something that has transpired over the last several generations. When you look at, and again, I'm kind of on my soapbox here, so bear with me here, where you have a young adult, basically telling off a matured, experienced adult. Now, I'm not referring to the president. I'm just saying that life in general. It's sort of my observations.
But they didn't do it 10 days ago, so I don't know how. It's generations in a larger dialogue or a larger conversation. But all we did was change political parties.
Yeah,
and the media's conduct is exactly opposite of what it had been. Nobody can deny that.
Absolutely. So, I won't get into the rhetoric and whether or not, the most recent executive orders and the recent firings, if they're right, wrong, or indifferent. But I think it's clearly evident that the majority of America basically said it's time to make a change.
Well, and it also 60% of America is in favor of the executive order. But let me ask you this, though, because this brings it home to your lane. And that is when we talk about a geopolitical issue, that's fair game on the Malamut program because it does affect markets. I believe the way that the media didn't cover when the former president did an executive order that ended the wet foot, dry foot, and that stranded legal Cubans and others in airports. They couldn't get out because it was hastily done. All the things you're saying that Trump did, but boo. It didn't affect any markets because the media, they supported it. They didn't report on it or they supported it. Here, 60% of America is in favor of this, but I believe the reason that the Dow was down 100 and some points yesterday is because of the way the media reported what the president did.
Harry, I think that was part of it, but think about this for a second. The moves that the market made, and I do appreciate you sending me a number of different pictures last week and it kind of went. Now it's sort of going unnoticed.
I know it was exciting.
You had that
20,000
moment of euphoria,
yep.
And it was different because the market got through that 20,000 basically in the pre-opening.
Yeah.
Of the day. And so when the market opened at 9:30, it immediately went through 20,000, and you didn't have that buildup, during the day. But think about how quickly now the 20,000, the number, it just sort of it's yesterday's news.
Yeah.
So when you take a look at last week in particular, Harry, the U.S. equity indexes, all hit new highs. The Dow crossed the 20,000 mark for the first time. The S&P was up 1%. We talked about geopolitical risks, and they're out. They're out there, Harry. Front and center. President Trump, he signed how many? I don't know how many executive orders he signed. It had to be. Seems like in the hundreds, but maybe
it's not.
But maybe that's the way that was broadcast.
It's actually less than 10.
He's made a number of statements about international trade. He's talked about taxes. He's talked about corporate regulations, which obviously are very, very important. There was a lot of discussion with respect to health care. We chatted about immigration and the infrastructure as well. So. But, Harry, I think a lot of what happened yesterday was due to the fact of corporate earnings, and the market might have gotten a little bit ahead of itself here in the last couple of weeks. You think about how difficult it was to get to that $20,000 or 20,000 mark in the Dow, and then it seemed like it was weeks. We had a big move right after the vote for President Trump, and then ultimately, the market just kind of went sideways for a number of weeks. And now the question is you're looking at earnings today, and again, I'm not going to pick on a particular company. Under Armour missed, and they missed pretty big. Stock is off, I think, Harry, 15 or 20%. MasterCard, got there. They made their number. AmerisourceBergen, I believe they got to their number as well. But ultimately, what is happening here, we continue to see a number of companies miss on the top line, and they're still managing to get to the EPS or the earnings per share on the bottom line per se. So, Harry, I think, what's going to happen here is that the market's going to continue to go through these fits and starts. And the fact that we were down at about 200 on the opening on the Dow and then came back and down roughly 120, and today it's down about 40 or 50, I think it gives your listeners an opportunity here, if they truly think that they missed out on owning some quality equities. It's probably not a bad time right now to take a look at your portfolio and do the necessary house cleaning and own what you've been thinking about buying.
We're going to take a brief time out. It's a great opening, and maybe when we come back, Chuck can explain what I was doing for about. It took me. I did a project that took me about maybe 60 to 90 seconds to accomplish. We'll be back with Chuck Malamut, all about your financial matters, as Early in the Morning continues in just a few minutes. Hey, thanks very much. Welcome back. 20 minutes past the hour. All right, full disclosure, because we want to let our listeners in on sort of the program, behind the program at times. I didn't leave Chuck, but for about 60 to 90 seconds, I decided that I needed to prepare something because I've clinched a tie. Is my date with Destiny this Sunday, because the worst I can do is to finish in a tie. Chuck, do me a favor. I have to take this, believe it or not.
Sure. All right, so Harry, so Harry, to your wide range of listeners, if they can only see, and maybe what Harry will do is he'll send out a photo so everybody can take a look. To the left, there is a nice one-page congratulatory email.
I am back. I want a full disclosure. That was Palm Springs. Yeah, I'm not kidding. Okay. I thought it was the president 44 because it was Palm Springs, and that's where he is or was. Yeah, right. So I took that call, Chuck. I kid you not, it was Palm Springs, California. So I want you to know I'm observing how you're explaining this.
So there is a nice one-page, 2-paragraph, 3-paragraph memo.
Yes.
That goes out to all the players.
Beautifully written.
Thank you, Harry. That to what we call the Muttman pool for entertainment purposes only. Yes. And immediately to the right, Harry took the time to sort of carve out a space.
Well, tell me how I did it. I taped a perfect size.
A lot of ingenuity here. Yeah. Way too much time, Harry.
I took Scotch
tape, ran it left to right, top to bottom, horizontal, vertical. Mm-hmm. Took your nice little Sharpie, drew a squiggly line throughout, so you can see from this vantage point on the wall a spot for another memo that is going to take quite some time, Harry. It might take maybe, I'm going to say, at least 30 seconds, maybe 3 minutes to write. Because I think what you might want to do is send me some of the accolades in advance so I can kind of post it out to everybody. And you can do that.
But you're a great writer, though, and that would take away from my glory if I write it myself. But what I'm thinking is the fact that no one has ever been the regular season champion and the playoff season champion in the same year.
So how about if we communicate Sunday night before you go to bed? Now I just make sure I get this absolutely perfect because I don't want to have any blemishes on this piece of paper.
And it's going to be on the studio wall.
There you go. And for all your guest hosts to watch.
Thank you, Chuck.
or actually observe.
It's an honor. It's an honor to be your dual champion.
Well, Harry, I don't want to say congratulations in advance, but worst case scenario is you get a tie. And then I guess we can crown you dual champion. But anyway, let's move on.
Thank you, Chuck. Thank you for that quality time.
So
can we talk about
let's talk about GDP.
Quarter GDP.
Yeah, I knew Harry.
You know me.
I know you too well. And the fact of the matter is that when I saw that headline come across, I said, well, I'm going to give this.
You thought of me.
I'm going to give this anywhere from 90 to 180 seconds. And
I didn't want to pile on. I decided not to text you.
And eventually,
you knew I knew.
Eventually, during the day, I got a link to some random article that talked about
bang
So economic growth in the fourth quarter was, I guess, the best word you can put. It was disappointing.
1.9.
The outlook, we believe that on a go forward basis that this will in fact improve. So GDP was up 1.9, as you just mentioned, in the fourth quarter. What happened was that ongoing trade and inventories dragged on those results. We think that we will go through 2% in 2017. And remember, the expectations coming out of the election were significantly higher. I mean, they were throwing out 3.5, 4. Mm-hmm. Now, if we get to 2 in 2017, that's going to compare to 1.6 that was the final number, the end number for 2016. Now, if Washington, if we can stop watching that sausage being produced down there, and a lot of the pro-growth initiatives that are being put out there, if we can get those into place, the expectation is 2018 will be north of 2.5. Because it's tough to move a number of this magnitude. It just doesn't immediately go from 1.9 to 3. It's going to take some time. It's going to take some cooperation. It's going to take some relief with respect to regulation. It's going to take some relief with respect to taxes. But we are pretty positive that we're going to get there.
I'm very confident because you look at what's happening. There's a president in place that's keeping his word. He's keeping his word on everything that we talked about previous to this point of your program, Chuck. So he's going to keep his word when it comes to lowering taxes for both individuals and corporations. Look at already, what does $2 trillion that wasn't there mean if that goes to work? Look at these examples of companies that are either retaining jobs in America or bringing jobs back to America. How about China's Ma, who is investing big time in America? I think we're going to get there, and I think we're going to get there quicker than some people think.
Harry, I want to agree with you. I'm hoping that is in fact the case. And interesting as we're chatting, I see that across the wire, Exxon just came in with their results they missed. They took a $2 billion impairment charge relating to some dry gas operations in the U.S. Rocky Mountain area. Now, the problem is that's a headline number, so you got to get into it and really understand.
Now, when you have an extraordinary type deal like that, do markets still hammer a company like that if they take a massive write-down write-off because of something that happens? Do they get hammered today?
Not necessarily. Well, I'm not going to make any predictions, Harry. They will look. I don't think it takes much to have a prediction to realize that stock will probably open with somewhat of a downward bias. But here's what's happening. So the media. Everywhere you look, in the U.S. stocks recorded their worst day of trading of the year in the previous session after the Trump administration signed an executive order on Friday to temporarily bar entry into the U.S. to citizens from Iraq, Syria, Sudan, Iran, Libya, Yemen, and Somalia. So that paragraph is embedded, Harry, in every article. And you probably have seen it no less than 50 times.
Oh, yeah.
So think about market psychology here for a second.
It's called market saturation.
We've had, I think, Harry, every call we were on yesterday focused on the executive orders. And it's because the news is out there and it's so readily attainable by everyone. But the fact of the matter, Harry, that was only part of the issue yesterday. It's a lot of this is getting back to earnings. So I think that what we try to do with our clients and prospective clients is hopefully get them to understand, it's not, you can't go from headline to headline to headline, because if you do that as an investor, you will commit financial suicide. There's no doubt about it.
And yet some of these executive orders, for example, the ones that make it optimistic that Keystone XL pipeline and the Dakota pipeline are actually going to happen, that's a positive event. I would imagine markets looked upon that differently than the immigration executive order.
Yeah, so getting back to Exxon, I'm just checking here, Harry. Yeah. So it looks like that right now, pre-market, the stock's down about 1%. So that's that's certainly not a big move by any way,
Chuck,
shape, or form.
Minute before the break, but you can take a couple if you need it. What's the psychology with the companies that decide whether they're going? And we're not talking about Exxon. I'm talking about in general. Exxon did it. Many of them do it. They knew they were doing whatever this event is called, this one-time event. So they knew what was going to happen. So they reported after hours. You're able to announce it right before the markets open. What's the psychology behind? I guess it means most times when these numbers get reported after hours trading, it's because they know that they haven't met their number.
No, Harry, no, that's not
Does
necessarily.
anybody?
No.
You tell me the people that have really good news to tell.
Yeah,
do it after hours.
Well, here's what happens. I mean, companies, they're very, very specific. They're going to report on a certain date. They're going to report on January 30th and January 31st, whatever it may be, and it's pretty much in advance. Everyone understands, the street, the analysts, the economists, the individual investors, the institutional investors, that a particular company is going to come either before the market opens or after the market closes.
All right, well, let me ask you this way. Let me put it to you this way, because I'll stand corrected. You're the expert. More often than not, if a company is reporting after hours, their result is not necessarily very good.
No, not true.
So
not true. So what happens
so many
is
times great news gets shared after?
What happens is, like as I said to you a minute ago, it's pretty much understood when a company is going to report, time of day or day and time of day. What rocks a stock or an industry is when a company comes out in advance of that reportable date and says, hey, we're out here 3 weeks in advance telling you that we think we're not going to have a good quarter for any particular reason. That's when a stock has a tendency to get beat up,
and they
because
do that
that's sort
early,
of unexpected news.
They do that early because they feel that's in their interest. If they just
they want to get the news out there,
get the bad news out.
It's so it doesn't come as any surprise that, and that's not uncommon that happens. So not be pre and post reporting, because we know the day of it's the
early.
Advance notice.
I got you. Let's take our halftime break. It's 31 minutes past the hour. Chuck Malamut, all about your financial matters, continues. And you can reach Chuck and his team, the Malamut Group, at 609-383-2010, 609-383-2010, 609-383-2010 for all of your financial planning needs. They literally will take care of every aspect. You sit down with Chuck and his team, and everything from the date that you want to retire to vacations that you want to take to college that you want to pay for, and all these other things, wedding planning, whatever it is, vacation planning. You tell Chuck your hopes, your dreams, your aspirations, and they'll develop a plan for you. 609-383-2010. This portion of our program is also brought to us by Resorts Casino Hotel Atlantic City. They're on the Boardwalk, 1333 Boardwalk to be specific. That's the Boardwalk at Pennsylvania Avenue. They're on the World Wide Web at resortsac.com. Put that in your smartphone, and you can put it, like I do, right on your home screen. And you just go right there, and you know how to do it. You just hit the one command, and it will put it right on your home screen. Then you have a hyperlink. Anytime you want to go right there, of course, you can always go right to the search bar and just put in resortsac.com, and away you go that way. But I have it bookmarked, and you can do the same and put it right in your iPad, your iPhone, your Android phone, desktop, whatever you use typically. Put it in there. And you can book a room. You can find a great place to eat. You can buy tickets. The Star Card and your player access login, all there at resortsac.com. Treat it as your portal to everything resorts. Upcoming entertainment, Air Supply in concert. I want to say this month, but tomorrow is officially February 1st. February 25th, Saturday. Tickets are on sale right now at Ticketmaster.com. Free self-parking in effect at the Resort Self-Park Garage or the surface lot that's located on North Carolina Avenue. And one last item. And they really, I don't talk about it enough, and I should. The local program that they do at resorts, it pays to be local. They have a Lucky Locals program where each day of the week there is something in it for locals. You can get 10% off an entire purchase at certain retailers at resorts. That's on Sundays. Monday, 2 times slot cashback. That's a new program. Tuesday, play your favorite slots and tables. Get 3 times comp dollars. That's Tuesdays. Wednesday, which is today. Wednesdays, 2 free revenue show tickets. Thursday, 2 times slot cashback. That's new. And if you buy dinner for 2 at Capriccio, you get a free appetizer. Friday, buy dinner for 2 at Capriccio and get a free appetizer. Saturday, buy dinner for 2 at Capriccio, same deal, get a free appetizer. And a reminder, the best new member program in Atlantic City is at Resorts Atlantic City. The new players who sign up for a Star Card, you can earn up to $500 slot cash. Same day, it's based on your tier points that are earned. All you have to do is visit the Resorts promotion booth for more details. Back with Chuck Malamut in just a few minutes. Don't go away. One more power segment straight ahead. Hey, thanks very much. Welcome back. 38 minutes past the hour. Chuck Malamut, starring in a program that we do every single Monday, all about your financial matters. So
Tuesday, Harry. Tuesday.
Tuesday. What did I say?
Monday.
I meant Tuesday.
I understand.
Chuck. Thanks for always having my back. Thanks for reserving a space on the on my wall too, man, for the second memo. Chuck did that during the break, kids. He told me not to say anything. So, did we cover corporate earnings?
No, we didn't. So here, let's spend just a minute. So corporate earnings we think are going to continue to recover. Now, we've had a third of the companies report, but we still see, Harry, that sort of that trend. Miss on the top line, get to the bottom line, but what is happening? Oftentimes, the expectations, the go forward news in 2017. A lot of companies are coming with, some real positive insights. So we think that fourth quarter results are going to beat expectations, Harry, by about 3%. So if that pace continues, it's very likely that earnings could be up about 8% for the quarter, the fourth quarter 2016. Interestingly enough, there's a meeting going on the next couple of days in Washington. Do you have any idea who's meeting?
Are they people from Club Fed?
It's not. Well, yeah, I guess it's Club Fed. I never heard it redacted to that. But no, the Fed is in fact meeting. But you would have never known because of everything else that's going on right now. So
not enough oxygen in the room.
So
that would normally be very, very big. But I'll tell you what is going to happen, though, Chuck. In the run-up to it, it is going to get big because there's going to be a whole specter out there. Is President Trump going to ask for the Fed chair to step down? There's a lot of drama that's ready to come.
The last I saw, there was this, not that we look at probability, but that's what we do all day. There's a 74% chance, Harry, that's going to in fact happen, that President Trump will ask Janet Yellen to step down. But getting back to the Fed,
let me ask you this though: what does that do? Does that shake up markets? Does anybody care?
No, okay. I don't think it does because the Fed is a body of multiple presidents, throughout the country, and she just happens she's the chair.
Yeah,
so
what's going to be interesting is when a president asks you to leave. Like for example, a lot of people thought the FBI director would be asked to leave. Instead, President Trump hugged him and asked him to stay. You never know with Donald Trump. You just never know. I think he does want her to leave, though. And if a president asks you to leave, she has a term, and they're independent, as I think most people know listening, that the Fed is independent. But if the president asks you to leave, it's going to be interesting if she digs down and stays or if she agrees to leave.
We'll see. But, I think probably most important.
I say she won't leave.
With respect to this meeting, the Fed is going to, again, probably broadcast that further increases will be forthcoming with the Fed fund rate, but they're probably not this time going to speculate about the timing because you think about when we started a few minutes ago, we talked about GDP coming in at a pretty disappointing number. So the Fed's obviously got to be worried about employment or unemployment and wage increases and. There's a whole lot of data.
I have a theory, though, Chuck, and I believe my theory is actually not a theory. I believe it's actually provable. The Fed was very, very hesitant to ever raise the interest rates while Barack Obama was the president. I believe that they're going to be very willing to raise interest rates. Now, Chuck's shaking his head no.
No.
Oh, I'm sorry.
I'm sorry. Okay. I got distracted. No, the Fed.
I believe
No,
they're going to be
the-
very willing to raise interest rates under President Trump.
Well, I think it's the
Just like Greenspan did to President George H.W. Bush, and it hurt him very bad.
But the data's got to be there, Harry. I mean, you just can't raise rates to raise rates.
Let's wait and see.
So if GDP lines up, true unemployment lines up, if you get a lot of pressure with respect to wage increases and potential inflation, then I think the Fed, has to make that move. But only time will tell. But so let's think about this for a second. You've seen nothing on the news with the exception of what's going on with President Trump.
Mm-hmm. Trump show.
So, what is happening now, the political realities are beginning to sort of set in. So the first week, obviously dominated with, it seemed like hundreds of executive orders, but who knows how many.
About 10.
There'll be some very, very specific policy differences between the president, Republicans in Congress, and that's going to become very, very obvious, Harry, we think fairly soon. So, items to be considered are tax reform and fiscal stimulus. I mean, because that's what President Trump built his campaign around. But the scope of any of these particular changes, Harry, might be less than some investors expect, and so now it gets back to what we're hearing. The Trump rally has faded. The Trump rally is over. The honeymoon is over. It's et cetera, et cetera, et cetera. So I think that to build a base going into 2017, the old question is the bull market tired and old and soon to be retired, or is it sort of taking a pause? I mean, we seem to think that the market is in fact taking a pause. And just kind of take a step back here for a second. I think we're going to maybe end on this in a couple minutes, but think about what has happened over the last year with respect to markets. In early 2016, I mean, it was crazy. I mean, investors were fixated, Harry, on the risks of recession and deflation. Yep. Think about, what happened in January, what happened in February. I mean, the devaluation of the Chinese currency. I mean, you just couldn't get out of your way. Every day it was just a bad day.
And it was very unexpected.
Now, we on a go-forward basis, there's just a lot of camps that say that, we're going to anticipate, the beginning of a new economic boom. And so now you have a recession, deflation, an economic boom that may or may not happen. So neither extreme, Harry, at this point in time seems to be somewhat justified. There's been a shift from deflationary pressures to inflationary pressures. I mean, that's been very, very obviously, but that's going to continue to take some time. Global growth seems to be improving. There's a big question mark with respect to China. And if global growth continues, that should be a pretty good tailwind, Harry, for risk assets, particularly equities and our U.S. dollar. But this is not going to get done easily. It's going to take time. It's going to take effort. It's going to take a lot of energy, to move that needle. And I think that if ever in my career as a financial advisor or just as a citizen of a U.S. citizen, I just kind of wish I could sort of fast forward this for 6 months to a year and say, okay, where are we and what in fact did we accomplish? But
I think it's going to be incredible, Chuck. I really do. I see that. Look, if we do the exact same thing we've been doing, we get the same result we've been getting. That's the definition of insanity. That's what we've been doing. So we've had fractional to meager growth. Job stagnation, even though this canard of low unemployment it's not fundamentally sound, if we're being honest. But now we're going to be doing the exact opposite. To me, that's a recipe for what things did. I ask anybody doesn't know what most probably will be happening, because there are things we don't know that can happen. A terrorist attack. I mean, any number of things can happen, and you just don't know what these geopolitical things will do. And I've learned that from Chuck over the past more than a quarter of a century. But here's my feeling about this, Chuck. If we go and do it exactly opposite of what we've been doing, and that means, lowering taxes, not raising them, encouraging investment, not discouraging it, bringing business back from abroad here and giving incentives to be here in America and not incentivizing people to do business outside of the country. If we can incentivize people by not hammering them too bad to bring all those trillions of dollars that are parked, somewhere else. Look, already $2 trillion growth in since November 8th with just changing presidents. Imagine if all those trillions of dollars come back. So I believe we're going to have a period of significant growth. That's my prediction.
Harry, I agree with you. I think it's just going to be a little more challenging than a lot of us expected.
Well, remember now, a lot of people forget this. It's just accepted that President Reagan's policies worked. It took years for President Reagan's philosophy of lower taxes and everything that they did to stimulate the economy and jobs and things. It took several years to get that done. One area that I was very curious about, and I don't think we touched on it, Chuck, and I know that we're already in overtime, and I've got a 5-minute break, and it's 49 minutes past the hour already, but did you talk about market extremes?
We do. That's just to cover that.
Okay.
Yeah, I mean that's what kind of you think about 16, where we ended 16, and now we're into 17, and again,
I wasn't sure if there was something on top of the last analysis, which was great, and I was paying attention. That would be this topic of market extremes. I just see if you do the opposite of what we've been doing, and what we did wasn't working very well. And I have always credited financial markets, Chuck, because they're really the star of, in one era when we had a lot of prosperity, Chuck, I think real estate disproportionately was driving the bus. And you never liked that because you always saw, you call it the third rung of the stool or something, you always saw the potential, just like the dot-com era. I was on top of that one. I said, hey, Chuck, there's no there. How is this happening? And then that popped. The over-reliance on any one thing is never good.
No, Harry, absolutely. You're absolutely right. So with that, I'm going to bid you farewell for today, and I will be watching, I guess, about 6 o'clock on Sunday, 6 to 10 somewhere.
I have to be very strategic, Chuck. Do you know why?
Maybe you should play Mr. Opposite.
Because I have a worthy opponent that needs to make up 2 games with only 2 selections left, and this person probably thinks he knows what I would typically do here, and I'm not going to be predictable.
Wow. Okay. Well, having said that, Harry, I'm going to sign off. I'm going to wish you a lot of luck.
Thank you, Chuck.
And we'll see you next week. I'm sure we'll communicate on Sunday somehow.
I hope so. I mean, I would be in tears. I'd be like Chuck Schumer, in tears, if you don't call me on Sunday. But I appreciate you reserving the space. What
time do you plan on going? Are you going to stay up for the whole game?
I'll be up.
Okay. All right.
Yeah.
So it won't be terribly rude of me to communicate with you after the game.
Your boy will be awake.
Okay, that's fine.
Have a great day.
Harry, thanks for having me again.
Thank you, sir. Chuck Malamut for all of your financial planning needs. 609-383-2010. Chuck Malamut is the official financial advisor to Hurley in the Morning, the Hurley in the Morning charity. Make him yours. Tell him I sent you. He's in his 26th year doing his weekly program on Tuesday mornings at 8:05. Chuck is the managing director and leads his team, the Malamut Group, at Morgan Stanley's Northfield office. Again, for all of your financial planning needs, turn to Chuck and his team, 609-383-2010.